You got approved for the car, you needed the car, the payment looked manageable, so it felt like the responsible move. And yet, zoom out for a second. At the end of 2025, Americans were sitting on about $1.67 trillion in auto loan debt. That means millions of people made the same responsible decision. And somehow, it added up to something that looks a lot less like stability and a lot more like a system. Because what if the real cost of your car isn't the number you see every month, but the future you quietly stop being able to afford? Drop a comment. What is your real monthly car cost once you include the payment, insurance, and gas? I'll read every single one. Before we go further, I want to be clear with you. I am not a licensed financial advisor, and this video is for education only. Before you buy, refinance, sell, or keep a car based on anything you hear here, talk to a qualified financial professional who can look at your full situation. And when I mention long-term investing, I am talking about historical patterns and illustrative scenarios, not guaranteed future returns. Now, with that said, let's talk about what this looks like in a real life that already feels stretched. Most people in this trap do not look reckless. They look responsible. They wake up early. They leave the house on time. They keep the tank full enough to survive the week. They know exactly when the direct deposit is supposed to hit because the loan payment is due, the insurance is due, and something in the house always seems to need money at the same time. Morning starts with a phone screen before it starts with an engine. The bank app opens first, not because they are irresponsible, because they are careful. There is a very specific kind of exhaustion that comes from living like that. You grab the keys, you feel that tiny pulse of relief because the car starts. Then a light appears on the dashboard, and suddenly the entire mood of the day changes. Not because the repair is happening today, because now there is one more thing waiting in line for your paycheck. That is what this life feels like. It is not dramatic enough to make a movie about. It is just constant enough to shape your entire nervous system. A household can be making around the median income in America, about $80,610 a year in 2023, and still feel like there is no real room to breathe. Not because nothing is coming in, because too much is already spoken for. A few dollars here, a premium there, gas on the way home, a sound you hope is nothing. A maintenance reminder you swipe away because next month would be easier, next month is never easier. And the strangest part is this. From the outside, it looks fine. You went to work, you bought the reliable car, you kept the bills moving, you did what adults are supposed to do. Then the thought slips in, anyway, I make decent money. So why does one bad month still feel dangerous? That is the part almost nobody says out loud. The key in your hand feels like freedom in the morning. By the end of the month, it feels more like permission. Permission to get to work, permission to keep the routine alive, permission to survive. And when an object can do that much for your life, it becomes very easy to stop asking what it is costing you in return. Here is where the story usually gets told wrong. People say cars are expensive. They say interest rates are high. They say inflation made everything worse. All of that is true. And none of it explains the real mechanism. Because the system does not need the car to be cheap. It only needs the payment to feel survivable. That is the game. Look at what a typical new car loan actually looks like. About $41,742 financed. At roughly 6.13% interest, stretched across about 66 months. Those are not extreme numbers. Those are normal. And when you spread a large number across enough months, almost anything can be made to feel reasonable. That is not an accident. That is design. Because when the conversation is framed around the monthly payment, something very important disappears. Total cost, future flexibility, the ability to walk away. The Consumer Financial Protection Bureau has been warning about this for years. Longer loan terms can lower the monthly payment, but they increase the total amount of interest you pay, and they increase the risk that you end up owing more than the car's worth. So the system gives you relief in the present and quietly collects more from your future. And once you see that, the entire experience starts to look different. That moment in the dealership when the number finally worked was not the moment the car became affordable. It was the moment the timeline was stretched. They didn't have to make the car cheap. They only had to make the month look survivable. And that realization changes the target. Because this stops being about whether you made a bad decision. It becomes about understanding the structure you made that decision inside of. You didn't fail some financial test. You stepped into a system that is very, very good at turning large costs into small, repeatable ones that are just comfortable enough to keep you from ever questioning them. This is the part nobody slows down for. This is the part that actually matters. Because up until now, everything still feels manageable. So let's stop rushing and look at what this really is. That payment you're making is about $745.60 a month. That sounds like a bill, something you handle, something you absorb, but stretch it out. $745 becomes about $8,947 a year. That is not a bill anymore. That is a category of your life. That is something that competes with everything else you want to do with your money. Now go one layer deeper. Over the life of that loan, you are not just paying for the car. You are paying about $7,550 just for the privilege of borrowing the money before gas, before insurance, before a single repair. That money doesn't make your life better. It just makes the deal possible. And even here, it still doesn't feel devastating. So now we slow down even more because this is where the illusion breaks. Take that same $745.60 every single month. Instead of sending it to a lender, you place it into a simple investment, earning an illustrative 7% annual return. Not a fantasy number, an educational benchmark used to show how compounding works over time. Now wait, do not rush this part. After 10 years, that stream of money becomes about $128,269. That is not a car. That is options. That is the ability to handle a crisis without panic, to change direction without asking permission from your bank account. Now keep going. Do not stop at 10 years because most people don't just have one car payment in their life. They have a cycle. After 20 years, that same monthly amount becomes about $388,741. That is not an investment number. That is a life number. That is years of freedom, years of saying no, years of not needing everything to go right just to stay afloat. And this is the moment most people go quiet because that number isn't a car payment anymore. That number is the price of how little freedom you're allowed to have. Now, to be fair, there are situations where this calculation shifts. If your car is directly tied to your income, if it is the difference between having a job and not having one, if the rate is controlled and the term is reasonable, then the math changes. But for the vast majority of people living inside this system, the numbers are not subtle. You didn't just buy transportation, you created a long-term claim on your future. And the hardest part to accept is this. It never felt like a big decision. It felt like a monthly one. And here's what almost nobody sees coming. The payment doesn't stay the problem. The system around the payment starts moving. You sign the loan, you lock in the rate, you think the hard part is over. It isn't. Because the car doesn't just cost you money when you buy it. It keeps asking, quietly, consistently, and sometimes unpredictably. Take insurance. In 2025 alone, motor vehicle insurance costs increased by about 2.8%. That doesn't sound dramatic. Until you realize something important, your loan payment is fixed. Your insurance is not. So even if you did everything right, even if you locked in a reasonable rate, even if the monthly payment felt under control, the total cost of keeping that car on the road can keep rising anyway. And it doesn't rise all at once. It rises in small, forgettable increments, a slightly higher premium, a renewal that feels a little heavier, a deductible decision you delay because cash is tight. That is how pressure builds in real life. Not through one catastrophic bill, but through a system that keeps adjusting upward while your margin stays the same. And then there's the other signal, the one people don't talk about until it's too late. In the final quarter of 2025, about 2.95% of auto loans flowed into serious delinquency 90 days or more past due. That number matters. Not because it is huge, because it is real. It means that for a growing number of people, this isn't just uncomfortable anymore. It is breaking. And here's the part that hits hardest once you see it. The loan was never the whole trap. It was just the part they made you sign. Everything around it, the insurance, the maintenance, the unexpected repairs, the slow drift upward in cost, that is what turns a manageable decision into a long-term constraint. And by the time most people realize it, they're not deciding whether to keep the car. They're deciding what else in their life they have to give up to keep it. So now the question changes. It is no longer, can I afford this car? It becomes something much sharper. What is this car costing me in the part of my life that doesn't show up on a bill? Because once you see the math, you cannot go back to thinking in payments. You start thinking in margin, in breathing room, in how much of your life is already spoken for before the month even begins. And that is where this rule comes in. Not as advice, as a filter, a line you draw between a life that is flexible and a life that is already committed. The 20% freedom rule. Here is how it works. You start by stripping your life down to its non-negotiables: housing, food, utilities, minimum debt payments, core insurance, the things that keep your life stable and running. What is left after that is not extra. That is your freedom. That is your ability to absorb a bad month, to take a risk, to say no, to change direction without everything collapsing. Now you take your car, not just the loan, the full cost. Start with that $745.60 a month. Then add insurance, add gas, add maintenance, add registration, and be honest, because the system only works when you underestimate this number. Now compare it. If that total is eating more than 20% of what you had left, then the car is no longer serving your life. Your life is serving the car. And this is where the shift happens, because this is not about guilt. This is not about regret. Those payments were not mistakes. They were tuition. Tuition paid to a system that teaches through repetition, not explanation. And once you've paid that tuition, you get to use what you learned. So ask the final question. If that loan disappeared tomorrow, if the car was fully paid off, would you keep sending that same amount of money to yourself every month? $745.60 every month into your future. If the answer is no, then the payment was never as harmless as it felt, because a harmless payment is one you would willingly keep making even when you no longer have to. And once you see that clearly, you stop asking what you can afford. You start asking what your life is allowed to keep. And this is where everything gets quieter, because once you see it, there's nothing dramatic left to say. No big reveal, no secret strategy, just a different way of looking at the exact same life. A Sunday night. Your phone lights up, a message from work, not urgent. But you know what it means. The older version of you feels it immediately. That drop in your stomach, that quick calculation. Can I afford to say no? Can I afford to push this? Can I afford one bad week? And the answer, quietly, is no. Not because you're irresponsible, not because you didn't try hard enough, because too much of your life is already committed. Now picture the same moment with one difference. The car is still there, but the payment isn't. That $745.60 is no longer leaving your life every month. It's sitting with you. Or better, it's already been building for you. That same message comes in. Same night, same job, same you. But this time, there's no calculation, no tightness in your chest, no quiet panic behind your thoughts. You look at it, and for the first time in a long time, you realize you have a choice. That's it. That's what all of this was about. Not the car, not the payment, not even the math. Choice. The ability to let one bad week be just a bad week instead of the beginning of a financial problem. The ability to say no without your entire life pushing back. The ability to move without asking permission from something you bought years ago. And once you've seen that, you don't need motivation. You don't need discipline. You need clarity, because the next question becomes obvious. Not should I own a car, but what is the exact price my life can carry without giving this up? If this video showed you what a car can quietly cost, the next step is figuring out the exact price your life can carry without losing your future.